So after the Conservative victory in the general election, where do we stand in relation to tax, pension and financial planning? Well, to understand that, we need to look back, and looking back takes us to the budget in March, where a number of proposals were made. Many of them didn't get carried through to the finance bill. But those that were talked about were the announcement of a consultation on the establishment of a secondary annuity market, the reduction of the lifetime allowance from 1.25 million to 1 million in 2016-17, and then the linking of the lifetime allowance to CPI. We had a reference to the establishment of a consultation on deeds of variation, and that was pretty much the only thing in relation to inheritance tax that was in the budget. We had the announcement of a new savings allowance, the personal savings allowance of £1,000 for basic rate taxpayers and £500 for higher rate taxpayers. We had the inevitable concentration on further anti-avoidance provisions and a number of changes proposed in relation to ISAs, including the input allowances. We had a proposal for the help to buy ISA and also a proposal to enable individuals to take money out of their ISA and then put it back in the same tax year without affecting the ISA allowances. So quite a few proposals actually, but very few of them made it through to the Finance Bill, because we had to have the Finance Bill enacted to the Finance Act before Parliament rose for the election. Only the essentials got through, basically. So when we look a little bit further forward from that, we had then every party's manifesto, and of course the only one that counts now is the Conservative manifesto. And that also included a number of interesting proposals in relation to tax and financial planning that will affect the lives of the clients of financial planners and therefore be of interest to financial planners. Two that particularly grabbed the attention were linked, and one of them was the introduction of a proposed £175,000 nil rate ban for the main residents only, to be added to the £325,000 nil rate ban. Now that was to be funded by a reduction of the annual allowance in relation to pension input from £40,000 to £10,000, and that reduction would commence once your income exceeded £150,000, when that allowance would be reduced by £1 for every £2 that your income exceeded £150,000. We've also had, of course, since the manifesto, a new pensions minister in the shape of Dr. Ros Ortman, so it'll be interesting to see what impact, if any, that she has immediately. Of course she'll have impact, but what impact she will have on the proposals in relation to pensions. So looking forward a little bit further, what we also have is the budget, which is proposed for the 8th of July. It's been badged as an emergency budget. It's far from that. It's basically a statement of what the spending review is going to reveal, and also, I think, an announcement of the changes that will be flowed through from the manifesto. And of course, in that manifesto, there was also a long-term aspiration stated, well, for the life of this Parliament, to get the personal allowance up to £12,500 in steps, basically, and for the higher rate threshold to move up to £50,000. So on the budget, on the 8th of July, what can we expect there? Who knows? There'll be a few surprises because it's a budget, but inevitably we will see, I think, coming through a restatement of some of the things that were proposed in the first budget this year, and of course a clear statement of bringing forward of promises that were made in the manifesto. George Osborne has said as much, and of course they will get those all-important spending cuts on the table now. The earlier the better from a political standpoint. And then we'll move to a second finance bill and a finance act, inevitably bringing into play some of those changes that will be announced and restated in the budget. So there's an awful lot to, I'm not sure look forward to is the right phrase to use, but it's coming. The summer will be quite busy with, as I said, the budget and a new finance bill and a new finance act. Keeping on top of what's going on will, as ever, be essential to financial planners.